In this special podcast, we focus on Coinbase executive saying institutions are looking beyond Bitcoin and Ethereum and into altcoin markets. We'll discuss what these could potentially be. In other headlines, third largest year to date Bitcoin exchange withdrawal driven by whales. Mysterious Solana whale wallets move over 60 million in SOL to Coinbase, and bankrupt Voyager to sell assets to Binance US pending SEC objection. Hello, everybody, and welcome to the Assets of Value podcast. Today, on 8th of March, 3 times a week, we connect to share our insights and perspectives on crypto, Web3, and NFT topics. We are the founders of Assets of Value, a Web3 research organization. Our podcast is not to be taken as legal or financial advice. Abe, before we jump into our special, let us have an update on the market.
Hey Shwab, good morning. Bitcoin is trading just below 22k, just hovering around that 21.9k to 22.1k region. Pretty tight, and the bulls are being defeated by the whales. And the whales, importantly, are turning into bears. This is a special situation which we can witness only in market reversal moments because that's the funding rate transformation from positive to negative. People are becoming scared, so that affects fear and greed index. Also, all of these together with the Mt. Gox unlock is contributing to this negative price action for Bitcoin. Ethereum is not having a pleasant day itself, trading below 1550, a crucial level to maintain the bullish nature of Ethereum. And Ethereum Bitcoin chart is not doing extraordinarily well. That means all coins can dump faster and in an accelerated way when Bitcoin dumps slightly.
Always appreciate a quick market roundup. You mentioned whales and you mentioned exchanges. They seem to be on our main discussion points today. We want to quickly gloss over whales and their behavior. When they move money onto an exchange, that means that they are ready to potentially dump the price. And if they move money off the exchange, that means that they are looking to hodl. So when we are looking at this behavior, we are seeing that Bitcoin has withdrawn from a number of exchanges. That's because of the Fed chair saying that inflation, although it's going to be a bit bumpy, the market was expecting a little bit more of a formalized statement, hence why Bitcoin came onto the exchanges. But then because the actual verdict was quite soft, it then got removed off the exchanges, hence that whales are looking to hodl for a little longer. Solana, on the other hand, is moving onto exchanges, and that is quite worrying for Sol and the Solana price. Interesting. But let's shift our focus to an exchange executive. Coinbase exec says institutions are looking beyond Bitcoin and Ethereum and into altcoin markets. Now, this is timely because millionaires are made during bear markets, and now, or a few months from now, could be the perfect time to really start investing into altcoins and look for that 50x gain. Is this something that potential investors should be now assessing and looking closer at the altcoin market? What are your opinions around this?
I mean, definitely. Whenever you see a massive opportunity that's fueled by non crypto reasons, I repeat, non crypto reasons, is a perfect buy. On the other hand, when you're seeing dumps and dumps over dumps because the market is overvalued, Shwab, I think you remember all these celebrities buying costly NFTs and flexing it on social media. All these party girls singing Bitcoin is the best thing ever, and all these people are rallying in the streets, projecting their 10%, 20% gains. We knew it was the top, it was the market bubble. So buying in such a dip is never a good buying opportunity. But if you're considering right now, Bitcoin is far down from its market top, previous top of 69k. We can see further downtrends. And whenever you buy in such a downtrend, it's gonna benefit you massively. Non-financial advice as always, but still, if you believe in crypto and if you believe in cycles, I think definitely I agree with you, Schwab, 100%.
So from an altcoin perspective, it looks like BNB is actually leading the pack. So it's currently fourth in terms of coin market cap rankings, and that's behind Bitcoin, Ethereum, stablecoin USDT, and then you've got the BNB token. Surprisingly, XRP and Cardano are 6 and 7, and you got Dogecoin, which is number 8, and Polygon Matic, which seems to be everywhere across the news these days, at number 9, followed off by Binance's stablecoin BUSD at number 10. So looking at the top 10, it's interesting to see a handful of stablecoins. I think that's expected as the markets turn more positive. Anyone that's invested in crypto is on the sidelines and in stablecoins. So, from a volume perspective, that makes sense. But from an altcoin perspective, is it between BNB, XRP, Cardano, Doge, and Matic? That's what the price action and the volume is telling us. Do you agree with that?
It's not a secret that whales tend to accumulate these tokens. XRP, Cardano, Doge, all these are whale favorite tokens. But when you compare crypto market cycles and when you analyze it, you see that the top coins of a particular cycle might not be the top coins of the next cycle or the succeeding cycles. It's not a secret that new coins emerge and rush their way into top 10. At the same time, stable coins with volume will get pushed back from the top 10. That's the perfect recipe for a market top. And all these actions, all these interesting situations are fueled by whales. And these coins you're suggesting are whale favorite ones. You can see that XRP and Cardano, they have been holding their value pretty much the same. It's just like a stable coin. No offense though. No offense to UST, but still. All these coins are not performing and they are not dipping also. That means these coins, despite the retail exit, has a stable and strong buying pressure and buy walls. That's the indication of whale influence and whale manipulation. But whenever the crypto starts to pump back, you can see that most of the whale exits happen in these top 10 coins, especially in Doge, especially in Cardano and XRP. But Polygon is a different story. Polygon is not yet a top 10 coin. It has partnerships with various respectable, reputable crypto firms, and we are expecting Polygon to enter top 10 in the next cycle. Will it be top 5? Will it be in top 6? We don't know for sure. But Polygon will surely be in top 10 next year, in the next bull market, because it has solid fundamental partnerships and solid development, and they are forward looking.
So there's a distinct difference between whale hodling and protocols built on fundamentals. If we look at the darling of last cycle, Solana, that's trading in with a market cap currently sitting at number 11. Polkadot, which we've not heard anything about, maybe they are quietly building. That's seen a drop of over 12% in the last week alone. Solana dropping near 16, just over 16%. AVAX as well, dropping a 10% at number 17. These tokens are all centered around technology, blockchain technology that institutions can bet on and are bringing something new from an infrastructure and from a product perspective to the industry. Is there enough room for all of this? And will we ever head towards the interconnected blockchain world? If we look at Polkadot, for example, that ecosystem is almost within itself an extension of parachains. Solana is trying to expand with the introductions of EVM. Atom, for example, is not even in the top 20 at the moment. So there's a mix of where do institutions place their bets on if it's not Ethereum and Bitcoin. Is there a clear winner when we take those two and move them out of the picture?
Brilliant question, Schwab. To answer it, we have to go back into the institutional investor philosophy or mindset. Suppose you are an institutional investor and you have a ton of money that you can invest in certain projects, certain startups. I personally love to see crypto projects as startups that are in a growth stage or at an evolutionary stage. So when you see a potential project that you can invest in, a traditional investor or an institutional investor always asks some questions. One, what's the future for the project? Two, can any other project just imitate it and take over the volume by providing more incentives? I'm using crypto terms, but you can relate to it when you compare the traditional situation. Three, does it have a profit making motive? And if it has a profit making motive, what's the average profit that it's generating per year or per 6 months or per quarter? If the number is significant. The final question they'll be asking, who is behind the protocol, or who is behind the startup? Do they have first-hand experience in building a startup from scratch, selling it, and rebuilding it again? When you get an answer to all these questions, you get the institutional investors pick. For example, let's consider Avalanche. Avalanche does not satisfy all the first three criteria, although it has a fantastic team behind it. So institutions won't get behind Avalanche. Just like this, using the simple investment psychology, you can figure out where institutional investors will go. And I think we should dedicate a full episode on what could be the projects that institutions will invest in, probably in next year or probably the year after or probably during the bull season. I think we should definitely do it. What do you think?
Certainly, 100%. And this episode has almost been a precursor to that discussion. I'm really positive that institutions are looking beyond Bitcoin and Ethereum. It shows validation that the space is here to stay. The technology is brilliant. In terms of adoption, it is far outpacing anything we've seen before from a technology perspective, if we look at the industry as a whole. So I'm really keen to deep dive into where institutions are actually putting their money in. So watch out for that next podcast of how to think like a pro investor. I think that pretty much wraps it up here. As always, it's been super fun. I'm glad you were able to jam with us today. That's it. Until next time. Thank you, everybody. We're signing off.